All right, so Rem, Pete is asking, what are some mistakes the financial industry makes over and over again? Great question, Pete.
One of the biggest mistakes that is made in the industry is a very simple thing called risk assessment. In many cases, the industry is so enamored by returns and by getting results and by the concept of selling, they forget the concept of risk mitigation and risk assessment in a way that makes sense to the consumer. So most consumers get all those flashy investments out there, all those things that they feel are exciting, without much disclosure as to what these things mean to them from a risk perspective. And for me, risk perspective doesn't mean that you go and get a big prospectus or you get a long disclosure that is in 5-point font, and that means you're disclosed. To me, disclosure is really understanding, knowing what the risks are, and by talking to the individual, by talking to the person that is going to be investing, and making sure that this is really suitable for them, because what's suitable for one person is not necessarily suitable for the other person, even though on the surface of it, it looks exciting enough to be suitable for both.
Yeah, definitely. Everyone is in a different, unique situation and not one size fits all. So I couldn't agree with you more there. So the next question is something that we get asked on a constant basis. So, in one form or the other, basically, the common question that we get all the time is, what are your thoughts about the current state of the market?
I think the thing that is happening right now, that's a phenomena that I see, that I'm curious about, is really this whole run in the market at times like these when we have all those problems and issues. And what I find interesting is that there is no thinking about risk mitigation, and there's no thinking that trees don't grow to the skies. So when you see those kind of market runs, and when you see people just not thinking about it, and I mainly fault the industry for not looking at this in a serious way and going, well, maybe this is too long of a run. Maybe things could turn around. When I see that, I wonder if we are really on the right track with things. And to me, that is my biggest fault in the industry, at least at this time.
Okay, so you mentioned that there are things going on right now, and one of those things that are a concern for many is the US budget deficit. Many of our clients wanted to know your thoughts about that and how it affects them, the consumer.
If there's anything that concerns me on a daily basis when it comes to the general market and the world economy in general, it is the US budget deficit. The US is a big chunk of the world economy. And we as a nation are a debt nation right now. Pretty soon, we're going to be paying as much interest as we generate in revenues as a nation. If you think of a household, the household that generates just enough income to pay a debt is an insolvent household. Now, granted, the US government can tax and get more revenues and do this and do that, but I can assure you there's a limit to what they can do. And there's a limit to what the consumers can absorb, what the markets can absorb, what the economy can absorb, and what the totality of the situation can absorb. And only by figuring out some way to be fiscally responsible again is when we get back on the right track. If you think just taxation is the right solution, I'm confident it's not the only solution. There are other ones out there. I can prove it to you mathematically. If you think the solution is generating more revenues for the economy by having businesses grow, I think this is a good step. But ultimately, there has to be other things in play. And we're going to be talking a lot about that down the line.
You mentioned transparency earlier in this live stream. And Ram, I know that one of your principles, one of your pillars is being the advocate for the client, fighting for the client. And I can't help but ask, can you share, give an example of things that happened behind the scenes in the financial industry, behind closed doors that you disagree with and that everyone should really know more about?
I believe there are a lot of games that get played in the industry, and I think it's a great industry. However, there are definitely elements in there that need to be cleaned up, in my opinion. And one of those big elements is the way most financial advisors that are mainstream project the investment world. They use things like statistics and numbers to past performance to justify what could happen in the future. I cannot tell you how many times I've heard someone who's been told that, well, the S&P 500 did X amount of return over the last 80 years. And the person himself is 7 years old. And what does that mean to them in 10 years if the S&P 500 was to drop significantly? There is definitely an attitude that fostered out there that just because something worked that way, then it should be working well for you as well. But the worst part about it is that the same people that tell you that, when the market drops, they duck and say, it's not my fault, it's the market. And that is the thing that I find to be unfair to the consumer, and I personally don't like to see. Instead of doing that, there are a number of solutions and strategies that someone can implement to still be in the market and still make gains, but at the same time, not subject themselves to problems that sometimes could be unsolvable because of overzealousness that occurs in the industry. We came across so many people that we had to repair the mistakes that others have made. Now, some cases, the mistakes can be repaired. Sometimes it can't be repaired. We do our best with it. But in many cases, also, we've had situations where we've seen the mistakes and we caught them in time and we fixed them. So one of the big things that we try and do is fix those mistakes. And the idea behind this, it's okay to make a mistake. We all make mistakes. But the question is, are you attuned enough to fix that mistake in time before something bad happens? And I think that's the most gratification we get in here from the things we do. Fixing other people's mistakes, we get no joy out of seeing the mistake. However, we get joy out of the fact that we fix it and the person is on track.
Absolutely. It seems fairly common sense, to me anyway. I mean, if you're able to mitigate risk, why not do it? You've worked hard, you've built up your net worth. Many of our clients have different goals, whether that's generational wealth planning for their children and their children's children, or perhaps other life purposes. Either way, they've built and created a life of significance. So why take unnecessary chances if you don't have to? All right, so let's switch the topic here a bit and let's delve into the mindset. And I want to ask this question because David has emailed this question 5 times. So it seems like he really wants to know your thoughts about this. So David is asking, what are some traits of a successful investor? And I'm sure many listeners right now would like to know this as well.
So I don't like to speak in the not. But I will say this, the biggest habit that I've seen with successful investors is something I call not having arrogance, of thinking that they know it all. Successful investors are usually open-minded. They understand that there are certain kind of solutions and strategies that are beyond the person who's uninformed. They understand that sometimes the ideas that they think are working may not necessarily work, or could be modified by someone who's experienced and can be adjusted. And also, successful investors rely on experts that can help them with the solutions that they need. Now, there are certainly some people that are successful within limits in what they do based on their own circumstances. So it could be somebody who built a certain amount of net worth that is reasonably good for them, but may not be good for somebody else, but they were successful at it. It happens. But the thing that I've seen with people is that sometimes it's a matter of luck that you carried it that far. I mean, I give you a simple case in point. I got a very successful investor that built his entire net worth, and that was in the range of $20 million roughly in the area of energy. And you couldn't get them to understand that there are other arenas that they should be in and they should be doing certain things. The result, that person had at some point significant losses and really squandered a lot of the wealth that they had because they simply didn't have the foresight to understand that they need to take some opinions from experts that know what they're doing and can offer them solutions. The idea behind it, if you're open-minded enough to look into solutions, you're going to find yourself to be in a better position. And one of the issues we see out there is that most of the consumers deal with what I call the broker, that the one that is helping them with their investments. And they overlook some of the advanced solutions and strategies that are sort of used by the ultra wealthy, and sometimes can be used by the wealthy and sometimes by some individuals for the purpose of enhancing their wealth and getting them to a level and a place and help them achieve the life purpose they're looking for.
That's a good point. It looks like the earlier topic seems to be of interest for most people. I'm getting more emails about questions about the financial industry. So I don't mean to bounce around topic to topic, subject to subject, but since this seems to be a popular topic for many, I'm just going to quickly go back to that and ask you, Ram, one more question, which is there any more that you can share about the ongoings in the investment world behind closed doors? So here is a question from Laura, which I think is actually a nicely phrased question, which is, what's a commonly held belief in the industry that you disagree with?
Yes, I do believe there's a commonly held belief in the industry that is sort of prevalent, and it sort of almost runs under the surface. And sometimes it runs without people thinking. I call that the set it and forget it syndrome. And what that is that there's an attitude that this thing has been successful, it worked, let's forget it. And there's two reasons for that. One of them is laziness, and the second one is simply lack of ability to make assessments by some. What I mean by that is that it's easy to let a good investment run or easy to let things run. Simple case in point example, right now we have, with the economy and the markets are moving, people think it's all good, let's just set it and forget it. And to me, that's a recipe for disaster because it's going to catch up at some point, but it catches up with people when the time they don't know that is going to happen. Let's talk about ignorance. Ignorance, in a sense, is that you don't know what you don't know. So in many cases, is that it looks good. I don't know if it's going to go up or down. It looks like it's going up. Let's continue with it. So for me, I don't think that's a good way to protect people's assets to achieve their life purpose and significance in what they're doing. People need a roadmap to reach the destination that they're looking at. That destination could be a simple level of optimal results they're looking for, or it could be an amount of significance they're looking for, or it could be a goal that they're looking to achieve. It could be anything. Ultimately, to achieve that and to maintain that, it requires a certain degree of thinking, planning, that is above the ordinary, let's just set it and forget it. And let's just invest here and there, it's going to be okay. And the S&P 500 did so much X amount of yield for the past 80 years. All this stuff is irrelevant.
Yeah, as we always say, past performance does not guarantee future results. We always need to check on a constant basis. And if there's anything that 2020 has taught us, it's that you never know what's going to happen next. It's been a roller coaster, for lack of a better word, from one unique event after the next unique event. So speaking of 2020, and this is going to be our last question in this live stream. And also, Rem, I've been getting comments that you're cutting in and out. Hey, Lauren, are you able to move his mic closer to him? Okay, great. Okay, so while they're readjusting his mic, if you sent us a question and we did not answer them, we will answer them via personal email. So do not worry, we have not forgotten about you. Okay, is it fixed? Okay, perfect. All right, so sorry about that. So last question. Speaking of 2020, do you have any comments about this stimulus package?
The stimulus package price tag currently ranges at about $2 trillion for each package. And while the stimulus package is designed to help the economy rebound, the big question for you as an investor is how are we going to pay for this? The budget deficit for 2020 was around $3 trillion. That's a massive number. And is projected to be another $3 trillion for 2021. And the big problem right now is that the amount of debt we have to pay for currently exceeds our GDP, our gross domestic product, meaning that we produce less than we owe, according to some estimates. One of the issues you want to think about as far as your investments and the economy in general, is that if interest rates were to rise, then the amount of interest that we pay on our debt also will rise, which means we got to pay higher and bigger interest payments towards servicing our national debt. But that means a lot of the money that the government is earning in taxes is got to pay for interest. So to balance the budget, the government has to do a few things. Perhaps reduce spending, create growth in the economy so to create more tax revenues. Or the big one, which we all know about, is increasing taxes. And when it comes to taxation, the people that get hit with it the most, of course, is the average person. Corporations do get hit with higher taxes, but somehow, some way, they find a way to raise the prices and pass that to the consumer. Corporations have to exist and have to create jobs. And if they find out that they're squeezed when it comes to tax issues, they will have to resort to raising their prices. But guess who pays for those higher prices? You. And that is why it's important for you to constantly think in the constant of how can I reduce my taxes? What do I do here? How can I pay lower? Now, you cannot eliminate taxes, and you have to pay your fair share of taxes. But there are a number of strategies and solutions that can help you lower, mitigate those taxes in a legal way, an appropriate way.
Definitely. And if you're watching this and you're not aware of some of these advanced strategies that Rem is referring to, maybe perhaps you're not a client of ours, feel free to reach out to us. And from our end, we will see how we can be of help to you and be of value to you. And let me pull up our contact information here. You can reach us at 310-820-4411, or you can email us at askask@icwm.com. All right, Rem, thank you so much for the live stream and for sharing your insight with all of us. And folks, if you have any other questions, either shoot us an email or call us, and we will get back to you. We will post the replay of this live stream in case you missed the beginning or wanted to watch it again, or if you wanted to share this with your friends and family. All right, everyone, have a great one, and we will see you on our next live stream.